Hey traders, it's Danielle. Welcome to the free video. So today I want to talk about Netflix. Now you might be a little surprised. Why would I be talking about Netflix? The pattern doesn't really look too great. It's basically traded sideways since all the way back in Q2 last year. But there's something really interesting about this pattern. So if you notice these stats up here, you can see that it says that pre-earnings 21 days in advance, this ticker actually usually trades higher by about 5% or $26.23. Now that's an average. Also, 8 days prior to earnings, it typically trades higher by about 2.46% or $12 on average. When you look at this ticker, you'll notice in the hot zone, it actually will trade higher even when it's been completely broken down going into the report, which I think is the most interesting thing about it. Because if you know me, you know that I love trend following trades. Normally, I don't really like trading something that's been broken down, but you can see these just massive rallies going into the Netflix earnings report. Now, last quarter was actually really interesting because last quarter, we came into the hot zone period or the 21-day period and you were already almost up at a new high. So notice that during that time frame it did not work because it was already extended. Now here, this quarter, we're coming into it in a completely different situation because we're down, broken down here, and we're bouncing off support at the 200 simple. So this leads me to believe that it's a pretty high probability shot of taking a trade looking for this type of move going into this earnings report. Now, we just entered the zone and I wish I would have gotten into it yesterday, or I guess that would have been Friday, but I did not. And today, with it being up 2%, I thought, I think I'm just going to wait and see if I can get a little bit better of an entry, hopefully between the 500 and 515 price points. If not, I might just have to buy a breakout move. But I'm going to be targeting up here into this zone. So you can see that there's quite a bit of price support here. We also have a fib level, 540. We have a range here at 566. So I think looking for Netflix to trade up into this zone is going to be the money shot. So how would I do that? Well, looking at Netflix in the options chain here, we have the earnings report that is going to be on the 20th. So I do not want to place any butterflies in that series because of the rising IV. However, I would like to look at something the week before. This would tell me, hey, we're probably going to get a rise higher, but it's not going to go directly into the event. So we can target really between 540 and 560, just depending on how high you want your profit target. If you keep it around here, that's just going to be a lower target. It's what I like to call the easy target. If you target a little bit up higher, you're just going to get a larger zone basically. So you could also just call it even and do 550. So when I'm setting up a butterfly, I set it up as such that my center strike is going to be at the target. So if we're targeting 550, there's your center strike. And then, just start widening it out. If you do 530, 550, 570, you have a fly that's out of the money. And the reason why that's great is because you're trading an oversold bounce, and those bounces can typically rip pretty good. With this butterfly, it's going to be $20 wide, and it's only going for a debit of $3.23. So you're risking $323 for a max of $1,677 per contract. Now, with the butterfly, I don't normally get that max. It does happen sometimes, but what you're really looking for is just the range. So for example, let's look at it like this. You're trading at 523 right now. 530, 550, 570. So what you want on this butterfly is for Netflix to start trading up into this range. X marks the spot. The closer you get to 550 before this expiration, the better off you are. But really, I would be happy anywhere in this zone. And since you're only paying a $3.23 debit, I mean, really at $5.33, you're basically break even. But because you're buying it out of the money, it would be up more than that at that time. So really low risk trade, really high reward. This is a way to trade basically the earnings hot zone here. So if you would like to learn more about this strategy, this is a strategy that I do every single quarter on repeat. You can go to simplertrading.com/repeat and sign up, because I'm going to be having a free webinar on March 31st at 7 o'clock Central. So I look forward to talking about the hot zone and telling you how I make my quarterly profits there. All right. Well, I will see you in the next one.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me